Hello guys and welcome back to the channel. So in this video I want to reveal my entire option portfolio and my thoughts about the options that I currently am long on and short on and why I have them. So this is the first video of many videos that I'm going to do about options and the wheeling strategy. This strategy I have found very interesting. However, I must be very transparent. I lost out on a lot of money in the tunes of more than $1 million because I limited my potential profits on Rocket Lab and Palantir, which is the biggest mistake absolutely that I've made last year. So if I would not have sold cover calls on my positions with Rocket Lab and Palantir, my account would be over $2 million and it's only currently at $400,000, which is doesn't make me glad when I think about it. But with the options, there is a handling how I can handle these trades so I lose less money. And I do think that the market has been completely irrational and it's not normal that stocks go up 6 times in 1 year. So I missed out on a insanely good bull run, but I believe in the next few years I will have the possibility to catch up to this bull run with the portfolio. So why am I interested in option trading despite and why am I still interested in it despite missing out on this insane bull rally? And that is because the option trading creates cash flow. So, and I have to be very clear, with the experience that I have today, I do believe that as an investor, you are better off picking stocks and doing nothing with them as long as you don't need cash flow. So let me say that again. I know that there's a lot of channels going into options. You know, the market has been a very bullish market, and you know, normally this is when the degenerate side of people come up. And I know from the comments on my channel that a lot of people are interested in going into options. And let me tell you, you don't need to have FOMO. If you do your study really well and you buy stocks that you believe in that are underpriced and you hold them for the long term, I believe you will outproduce the best wheelers or, you know, option traders. Because, you know, when you're doing wheeling, I'm gonna do a whole new video about it, but this channel, I'm trying to be, you know, real about wheeling and option trading, and I hope you will appreciate it. So I'm not going to be doing this hype of like, oh, learn how to handle your life and, you know, you can sell options for a living and it's going to change your life around next month. I think your best shot at becoming wealthy is, you know, doing your research, having an income that is higher than your spendings, investing in the stock market every month, and building huge positions in companies like Palantir and Rocket Lab. And huge asterisk there, I was building positions in Rocket Lab when it was $4, and I was building positions in Palantir when it was $8. Now when Palantir was at $80, I was not building my position anymore, and I had no intention of buying more shares, and I thought it was crazy overvalued. On Rocket Lab, I don't think it's crazy overvalued. I do think that, you know, if you have a range of like fair valued and, you know, undervalued and a little bit over fair value, I think Rocket Lab is a little bit over fair value, but I can handle the valuation. On Palantir, I have no freaking clue how we got to $80. Like, I cannot even find a model that makes it work, okay? So it's just crazy how overvalued Palantir has gotten. Whew, that was the longest options intro. So why would you want to do options trading? And here I'm specifically referring to the wheel strategy or selling options. That is if you need cash flow and you are not concerned so much about your capital gains. In my position, my account is together with my dad, and he is planning to retire very soon. And so what we were planning to do is basically sell, it was only Palantir at the time and a little bit of Rocket Lab. And, you know, he was going to retire. And I was very not happy with this because I understood how big of an opportunity these stocks were, and I wanted to find a way how you can have your cake and eat it too. And the selling options was the best way that I could find this, because then we can sell options on our positions, and I'm able to generate cash flow, and both me and him can have part of that cash flow, and he can retire and the portfolio can still be growing. But in this process, we also limit the growth of the portfolio. So if there is a year where your stocks go 5x, if you're selling options, you're not going to go 5x. You're still going to have a nice year. I mean, last year I had 80 something percent on the portfolio. I'm very happy with that. But I'm not gonna lie to you, it really annoys me when I know that I could have $2 million on the portfolio, and instead of that I have 400,000, and I could have done a 5x, and instead I only got 80%. And again, the 80%, I think it still crashes. Yeah, not a lot of people have done 80% on the market. Financial education, Jeremy hasn't done that. Joseph Carlson, not even close. TJ, the wheel deal, I believe he's a wheeler. He is maybe also up to 80%, but I believe I outperformed him with a few percent thanks to Rocket Lab. So anyways, let's get into the options positions. So I have, and by the way, if you're interested, I saw a lot of very good comments where you guys said that you're very interested in my options and selling options, and so in the comments below, please let me know, because I have no clue where your guys is who are watching this, like where is your level. So do you know about options, or do I need to make videos about like a call option means this? A put option is this. When you short a put option, it means that you're bullish on the stock. When you're long a put option, it means you're bearish on the stock. Or I can go into very advanced strategies with you. So I'm just curious. Let me know in the comments what type of content would you like to see, and what do you want to know more about. So I wanted to do the wheel strategy on Tesla, and to do the wheel strategy, you need to be very, very bullish about a stock. And Tesla for me is like, I'm not as bullish on it as Palantir or Rocket Lab, but if you ask me if Tesla is going to be higher than it is today in 5 years, the answer is definitely yes. I don't know if Tesla is going to be a 10 trillion company like many claim, but I'm sure as hell no, it's not going to be 1 trillion. And the reason why that's so important is for wheeling is your purpose is not to go for the highest capital gains. My goal is to go for the highest cash flow, right? So it's kind of a different mindset that you have to adopt. And as long as the stock is very volatile and I know that it's going to go up, I can potentially earn more money on. So if the stock goes sideways or doesn't shoot up into the air, with the options, you can maybe outproduce just owning the shares. And the worst thing that can happen is Tesla shoots up into the sky and I have cover calls on it, and I have to basically close the position, lose the shares, and be in cash on my account, and then I have to find another stock. And in Tesla's case, I'm okay doing that. In Rocket Lab and Palantir's case, I'm not okay doing that. So that's the difference. So you can see that I have a 760 put option on Palantir. This is a very advanced option strategy. The reason why I have this is because of starting the wheel strategy. I'm very, very transparent with you guys. I started using margin, and I bought I sold a put option on Rocket Lab for $200,000. So that means that if Rocket Lab would go below $5, I would be obligated to buy $200,000 of Rocket Lab. And basically I sold this option and I thought, no way Rocket Lab would go below $5. It's so undervalued, it's ridiculous. So it's just a cash grab. I'm using my margin, and I think I got maybe $14,000 for 1 month of risking this money, and I was like, this is free money. And of course, 2 days later or 3 days later, Rocket Lab announced their infamous capped cover call capital raise, and the stock plummeted 20%. And I was assigned the shares when the month went out, but I was already okay with that. And I was thinking, okay, I have these shares on margin, but my conviction was so insanely high. So I'm not recommending you guys go on margin, and I think it was in a way very stupid what I did, but I had an insane good conviction on Rocket Lab, so that's why I did that. And at that time, my account went minus, and that means that. I mean, it doesn't. It just means that I have margin on my account, right? And now that I have made quite some money on Rocket Lab and Palantir, the margin of my account, so the amount of margin that I can use is insanely big on the account. Okay, let me know in the comments. I don't want to make this video insanely long. If you want me to explain that more, but the point is the way because I don't want to sell Rocket Lab and Palantir, so the way I decided to handle the minus on the account is to sell options and fill the account back up that way. And maybe I will be also able to send money out to the brokerage account to put the money, the cash balance of the account back into positive. So Tesla, when it was around $250, and I saw the event that they put out with the autonomy and the Tesla bots, I was like, okay, this company is 100% the future, but my account is minus, so how can I still play this stock? So I sold a very, very deep in the money put, which basically has a delta of 1, meaning that every dollar that Tesla goes up, the value of the put option goes down 99 cents or something. And because I sold it, I earned that. So it's pretty much the same thing as owning the stock, but instead of spending money on the stock, I got money on the account, which I need because the account was in minus, and I'm paying money on that minus. Paying interest on that minus. And I didn't think it was very risky because the put option is very much into the future, and because of my Rocket Lab and Palantir position, the margin of safety of the account is still very, very good. So I'm very up. I think I was up like 40 or 50,000 on this Tesla position because it shot up in the air. And I was smart enough to not sell cover calls on Tesla because I thought that it would keep going up until we hit like in the 400s, 450, and then I started selling cover calls, and I sold a $500 January 31st cover call that has served me really, really well. I think I'm up, super much on that. So my plan with Tesla is to keep selling puts and calls on it and try to ride this wave up. So that's very simple. Now here you can see I have my Rocket Lab position, 64,800 shares, and I have 648 cover call options. These used to be $8 cover call options, but I managed to roll them. And this also put my account further in the negative because I had to pay $4 to be able to go $7 up on the strike price. So, and again, you would think it's very, very risky to use your margin to do this. But when I was looking at it, I'm like, okay, I'm paying $4 to be able to gain $7 on Rocket Lab. So that's like an almost guaranteed 70%. Let me just do the math. 4 divided by 7. Yeah, so that's like a guaranteed 57% return. And I think that the chance of Rocket Lab closing below $15 at 2026, there is a chance. It's non-zero, but I think it's very, 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 very limited. So I felt very safe doing this. And you realize like my account would only start to get hit if Rocket Lab would go below 15, and then still for quite some time, I think like down up to $12, my cover call would still be protecting the account. So that's my Rocket Lab cover call. And to be honest, I'm not sure yet how I'm going to handle this, because I'm still very, very bullish long-term on Rocket Lab. The ideal scene for me would be if 2026 we somehow would end around $15 to $17, because then I would just be able to roll the option and basically roll it out. It would expire worthless, and then I own the shares outright and I have no cap on the upside. If the year would go, and again, I know maybe I'm going to get a lot of hate for saying this. I said it in my videos, if Rocket Lab would end up 2026 January being $15 to $17, it would not be because Rocket Lab, the company, is not doing good. It would be because something happened on the macro, interest rates went up, war broke out, something. If Rocket Lab stock would go to $50, I think I would have to sacrifice my shares and lose them. I have about $1 million tied up in Rocket Lab. So if that would be executed, and then my account balance would go up by about $1 million, putting the account way into the positive. And at that time, because I don't want to not be in Rocket Lab, I would have to see how to get back in the stock, which would be maybe by selling put options or buying leaps, so that I can maybe then, instead of owning 65,000 shares, I would own 650 leaps. So I still have the position, but I missed out on a huge part of the gains. Yeah, again, this was the biggest mistake I've made last year. I don't know what to do about it. Palantir. Now, this one is interesting because you see I have a $24 cover call. Again, that's part of this big mistake that I did. I did it when the Japanese yen carry trade fear came on the market, and I thought that was a very good way to secure my account. And I sold that stupid freaking call option, even though, yeah, it was just very, very, very stupid. Now, I looked at what I should do with, and because Palantir I thought was so overvalued at 80, and you know what happens with the options is the more the option goes in the money, the delta of your option gets closer and closer to 1. And also when I try to roll up and out, I'm not getting time value for the option. So when you're so deep in the money, you basically have to pay to be able to roll up your options, and it doesn't really make financial sense. So let me give you an example. So if the stock was $100 today, then the $24 calls delta is basically 0.99, almost 1. But if I want to roll to the $35 or the $40, it's also at 0.99 or 0.98, and you basically almost don't get any time value in the options. So that means that if I want to roll up from 24 to 40, I would have to pay $16, which is the difference between the. So it doesn't really make any financial sense. But now that the stock is on a major pullback, there is hope. I was actually looking at it today. My option is April, and if Palantir manages to be you know, at this level, we're at 65 today, you can see it up here, or even maybe closer to 50. That would be amazing. Because I was looking at it, if I would roll the option from 24 to 35, and that's the 2026 option, it would cost me at the high end 755, at the low end 650, and you know, in the middle 7.1. So rolling up $11 cost me $7. So that's also a 7 divided by 11 is a 63% return on the money. And what is the chance? Like, I consider this practically risk-free because I don't feel that Palantir will be below $35 anytime next year or the year after, or maybe ever. And you know, if I just do this, use my margin to roll the option, even though I pay interest on this, if I wait this out, I basically like lock in a 63% return on my account. On Rocket Lab, a 57%, and that's basically majority of my account. So that means that for 2025, I lock in 57% or around 60%, which is in the bag already, you know? So I think that that's insanely good. Now, the next position that I have is Enphase, and that is a bit of a funny one. So again, you can see here that I have the same type of deep in the money put as I have on Tesla. But what happened is I sold a put option on Enphase, and I was moderately bullish on Enphase. The stock was at $100, and I was like, okay, I think this company is okay. I studied it in the past, but it's like not my hottest pick, but I know that it pays very, very good option premiums. So I was like, okay, there's ain't no way it goes below $100. Sell the put option, do the cash grab. And again, like a few days later, the stock was, or you know, the option was at $80. Then you know, they had earnings, and the earnings was really bad, and then the stock went, or the option went down to $60, and then they had their earnings call, and I tried to listen to it, fell asleep halfway, and I was like, okay, I actually don't give a flying F about this company. I don't think they're going to do well, and I was like, oh, I don't want to have it. But the option was basically exercised on me, and then I was like, okay, at this point, it pays very high premiums. I think I can manufacture the win, and it's like a good challenge, you know, because I want to see how hard is it to, you know, manufacture the win when the stock goes against you. And then Trump got elected, and the stock got completely destroyed, and it went to, I think it fell like 20% the days following the elections. And I was like, okay, guys, so this is a company that is doing not so good because the interest rates are high, the interest rates are coming down. Trump got elected, and I was like, that is not going to, you know, not make solar cells a thing. Like, I get that Trump is not so hot on it, but I'm like, solar cells on housetops is here to stay. I think that if we go 10 years into the future, there's going to be a lot more of that than there is today. Enphase is already profitable, so I'm like, that fall for me was completely not justified, and I was like, okay, I didn't like the company at 100, but the price fell so much that I'm like, okay, now I'm like, I have nothing to lose. I don't think that the company is going lower. So I got assigned the shares, and then basically I quickly changed them over to this deep in the money put, which is the same logic. Instead of me laying out money, I got money paid onto the account, and it's the same as owning the share. The only difference is that if the stock would magically be at $200 in 2 months, let's say, I cannot make more than up to 150. So my put option prints money up to 150. And then as we go like 160, 70, 180, I don't make money anymore. Whereas if I would own the stock, I would continue to make money. So that's basically the difference between the two strategies. And then I started selling puts on Enphase because I'm trying to do a strangle strategy of, you know, selling puts and selling calls. And I can sell calls against my put option, but I felt that the price is so low that it's not time yet to sell a call. And currently, my put option is challenged. The stock price is 68 or something, but I'm really not worried about this position. I don't think Enphase has a room to go lower. So I think that sooner or later, this not so deep in the money put option is going to expire worthless. And if not, I'm just going to roll it. And I think that the deep in the money put option is going to print money. And once the stock is in the 90s or close to the price that I got them at, because I got it at 100, then I will start selling calls, and then I will have cash flow from the puts and the calls. And very interesting on Enphase that the stock is down. I need to get you the exact numbers. This video is already very long. But I tracked the results, right? And I remember 2 weeks ago, I was telling my dad that the stock is down like 30%, but we are only down 15% on the position because I had some, you know, calls that, I had some puts that expired worthless. And yeah, and we got we got premiums, right, to take the stock over at 100. So that was very interesting to see. And if the stock stays around, you know, 70, 80, despite it being 30% minus, I think within a few months I will be plus on the stock despite it went down. So that's a very interesting point in the wheeling strategy. Okay, guys, so this was my first options video. We had to start somewhere. Let me know what you thought about it. Let me know what you want to see more videos about. If this was too advanced for you or it was not advanced enough. So very curious to see, and I will go after your comments and yeah, do that. It's a new side of the channel. I'm very excited to do it because, as I said, it handles a problem for me. And the one promise that I can make is I'm not going to be a hype channel that you see on other channels that you can sell options and retire and not do your jobs and or, you know, not have to work ever again in the day in your life. I'm going to keep it very real. And the very real thing is that I believe that the wheelers perform worse than the people who pick very good stocks and just long-term sit on them. The only advantage is with the wheeling is that you get a cash flow. So if you have $1 million invested at the end of the year with stock picking, maybe you can have 1.5 million in paper gains, or you can do wheeling and you can have $1.4 million with actual cash on your account. And again, depending on life situation, maybe one is better than the other. But yeah, there is trade-offs. There is gimmies and gotchas with everything. Cool. Anyways, thank you so much for sitting through this. Let me know what you think, and I'll see you in the next video. Ciao, ciao.